Hi there, it's Phil Hall of Mortgage News Network at the MBA's annual convention, and to my left is Craig Focardi. And Craig, let's start broadly. What do you see as the state of the industry today?
I think the state of the industry right now is heading in a couple of divergent directions. On the one hand, industry volume has been dropping, and so the main imperative for mortgage lenders today is how to generate new business in the purchase market or in refinances or in new niche products. I think the other key issue in the industry right now is how they are grappling with regulatory compliance and how that has slowed down their operations at the same time that they really need to automate and improve their operations in order to better serve the customer, particularly the millennial that's more digital, more technological, and the kind of engagement that they have in the online and in the mobile world, they would like to see a little bit more in the mortgage industry when they go to shop for a mortgage.
What about the overlap between compliance and automation? Is today's automation helping the industry get into compliance and stay there?
I think it is. While the initial reaction to compliance is that it's going to slow things down, and it often does, for organizations that just throw bodies at the issue of compliance and don't look at a way to integrate compliance, whether it's data collection, document collection, and storing that information so that they can respond to a compliance audit, if they don't get past the manual response to it and automate it, it's going to just leave them with higher costs and smaller profit margins. But by automating and making compliance an integral, smooth part of the process, they can serve their customers and the compliance issues at the same time.
I've always been a little bit skeptical about the way the industry has used technology, or to be more accurate, has not used it, and I've heard a lot of complaints that the industry has been traditionally slow in embracing new technology. Is that a fair complaint?
Yes and no. Yes, but because the industry is quite complex. Originating a mortgage is a lot like trying to building a car moving down an assembly line, except you don't get to pre-engineer what you're building that day on the assembly line. Every customer and every loan product and set of documents is different, and there's a lot of documents coming in for a bunch of different areas. So that has made it hard, I think, to automate. The issue is that there's a lot of component systems that have to integrate with the core loan origination system, and that's really the challenge, moving thousands of data elements and integrating in that. So they are slow to adopt in some ways, but on the other hand, there has been rapid adoption of online lending, automated decisioning, online mortgage payments in a bunch of different areas. So they have made adoption, but still, if you look at the MBA cost study data, mortgage technology spend has doubled from about $50 per loan in origination 12 years ago to $100 today. Now that sounds like a lot of increased spending, but in point of fact, it stayed flat at 2% of total origination costs. And so the labor costs have gone up a lot, but tech spend has stayed flat. And so I think by greater tech spend, you can get those, those origination cost per loan numbers down.
Well, compliance costs and technology costs are pretty expensive. I would assume that the larger institutions have no problems covering that, but what about the smaller institutions, the independent mortgage bankers, the community banks and credit unions? Are they able to cover these costs?
That's a great question, and the MBA cost study and peer group studies have shown that both large lender and small lender origination origination costs per loan have increased at about the same rate since 2002, where they were somewhere around $2,000 per loan, and according to the MBA in the first quarter of this year had exceeded $8,000 per loan. For the smaller institution, the challenge is that they don't have a large IT shop to tie everything together, and they're more reliant on their LOS vendors to help bundle all the different component solutions in with the LOS in order to complete the origination process.
Craig, thanks so much for joining us today.
Okay, great. Thanks for having me.
This is Mortgage News Network.